Alright, what's going on, guys? Welcome back to another video. I know I'm posting this really late, actually, really late. Just been kind of busy, so I haven't really got time to post anything. But do want to go over a couple things from last week that can be useful going into this week. Actually, there's like 3 things, but a couple of trades that I saw, and kind of things that helped me dictate or gather a bias of where we were going for the second half of the week, so Thursday, Friday. Kind of just looking at everything here. This is the 15-minute time frame. Let's just start on the 1 hour. This box here is a daily order block, so you can notice price never really fully came into the order block. Keep in mind, I use the body, not the wick. So, I mean, obviously, if we extend this to the wick, we traded into the order block and rejected right off of it. But I like to use the body as just a little bit more precision that entails that, right? So, back to the hour time frame. We never really traded up into there, but that doesn't really mean that we didn't really reject this area, right? Keep in mind, we still have that wick that price rejected off of. What that basically told me is price really does not want to go any higher than here. So automatically I'm looking for from sells from this high. This kind of solidified, in which it did. I kind of figured this would be the high of the week, with this being the low of the week. Right, so we now have this swing, daily swing, or weekly swing, I guess, daily swing of our new delivery range, right? So one thing to keep in mind is this is the area where price is going to be delivering until we make a new structure higher or lower. One thing to point out too is how I know that this is our dealing range. Obviously, we made a low and a high, so I mean, it doesn't really take a smart ass to figure that out. We made a low and a high, but notice how price plays around this 50% area, half of this range, 50%, and notice how price literally respects this area and trades higher, and we kind of reject here. Price didn't close above. We closed above here, but came back down. This doesn't really, for me now as a trader, it's not really anything special, but when you're first starting off, this 50% is going to be pretty helpful in understanding premium and discount. So we traded lower. This is discount. I'll just type it out. Discount, and up here is premium. So when price wants to buy, it's going to buy from a discount, and when it wants to sell, it's going to sell from a premium. Which is why we traded higher, went lower for a reason, and look at this jump after coming into discount. We're trading from a discounted price to go higher. That's what creates a dealing range, right? Now, that's just kind of something I want to throw in for you guys. Going into these 2 trades, starting the 5. Another thing that we want to utilize is how price reacts or trades off of the new day opening gap. And there's going to be one for every day of the week in a trading week, and then you have your new week opening gap. So notice how I have this high up here marked, and DOG high and DOG low. This is the gap from when the New York session closes and the Asia session opens. There's usually a gap, or it's maybe not as clear, but that's always going to be a gap that we can reference throughout the week. So in this case, I'll show you guys exactly what I mean. In this case up here, price again traded right away from this gap. So when we opened, we started trading lower, right? We made this low, made this low. What this is telling me is price is failing to trade higher, which automatically gives me the bias that we are going to be short for this day, and you pretty much to finish out the week. Now keep in mind, Friday consolidated, so there wasn't really no expansion here that we could dictate where we are really going to go. So I kind of stuck to intraday instead. But Thursday was clear that we were going to sell. Very clear. Now, getting into like the PM session, this is 12 o'clock. So 3 p.m. Eastern, 12 Pacific. Jeez. I'm looking for short opportunities, right? I'm not gonna buy against this crazy expansion to the downside. Now, even though there were opportunities to buy, I'm not going to do that. So what I'm looking for is price giving me an opportunity, or basically showing its hand where I can get into this market. I wasn't awake. I slept in, so all of this I did not get. Waited to hear. I slept in. Who cares? You can do that when you trade. What I'm looking for now is a low risk opportunity to get into the market. Now this purple line here is a previous week new day opening gap. Again, I reference these no matter what day it's from. If it's a Monday gap, Tuesday gap, Thursday gap, and it's a Friday market trading day, I'm still going to utilize it because this is what price does. Notice how we have these equal lows. Notice how we have these equal highs. What is price doing every time? And these are relative equal highs, so not like perfect like these. But what does price do every time we touch the gap? And for all you support and resistance traders out there, you know exactly what this is. I don't trade support and resistance, I reference it. I get an understanding of where the market does not want to go, meaning it does not want to go higher, meaning I'm looking for sells. Why? Why the hell am I going to buy when the market is telling me it wants to go lower? So to confirm that, equal lows here, we trade right through them, and then this is kind of where I'm like, okay, we traded through these lows. If price wanted to go higher above these highs, then after trading these lows and getting this liquidity, notice how this was an aggressive move. We make these down candles were pretty decent size, right? 45-point candle here just on a 1 minute time frame. And then right after we make this low, we make a wick and then quickly trade the other way. So that's what tells me that this was a liquidity run. So what that means is if price wanted to go higher, it would. It didn't, so I'm looking for shorts. Right when we trade and make this high, I'm automatically waiting for price to displace lower because I saw we made this candle here failed, this candle failed, this candle didn't reach, and this candle touched the gap and traded down right away. Now, I could have been a little bit more precise with the entry, but because of this, it's inverse fair value gap, but I was just like, okay, wherever this was my entry right here at the midpoint of this fair value gap, I'm like, okay, I know I'm going short. I don't really care where I get in. I know we're not going higher. Now, there was always the possibility that price could test it again, right? Because we made this fair value gap. Notice we traded into it. I could put the box there, but whatever. Traded into it, and then we went lower. But the difference between this move here and this move here, two different things. One, we already have a target. That target was traded through and we went the other way. What's the next target? It could be this low, yeah. But in this move of displacement, we kind of made equal lows. So now, relative equal lows. Now this target moves, but we have another target here. So if the market really wants to trade lower, more than likely we are going to see go for that actual draw on liquidity, which in my eyes shifted to this low in particular, right? And the reason for that is because, again, going back to swings, it's not that, I was doing the 5. Going back to swings here, we have a 5-minute dealing range. Where's my, I'm tripping this right here. Now you can do it from the body, you can do it from the wick. With this, you know, I'd rather do it from the body, but just to show you guys, kind of emphasize what I'm talking about. Again, price wants to buy from a discount. This wick or this low is in a discount of this swing. From this low to this high, that's price swinging. From this high to this low, that's price swinging. That's how you make your dealing range. So that tells me I want to look for price to take out this low because we are going to probably hunt a discount of this range and then possibly trade higher. Right, not necessarily trade higher, but possibly, which we did go higher right after. Again, liquidity run, we targeted the low, traded higher, and then of course price fell even lower. Regardless, this is kind of how I go into my trades. It's just I notice these things by what the market is telling me. It's the wrong one. And this is how you capitalize on those trades. Now, to give you guys an idea, this is the micro. I also trade the mini, but this is the micro. And a lot of you guys that follow me on Instagram are like, you're not really making that much money. Sure, okay, whatever. It won't let me do it because the market's closed. But oh, never mind, it did. All right, stop loss above, stop loss $239, and my take profit is down here. This trade, I didn't collect $1,000 on this. I collected this much, 588. only because it was late in the day, so I knew price was going to go lower, but I just didn't want to watch this trade the whole time, and I didn't set this as a limit, so that way I can, adjust my own take profit. I know I could put like a buy stop or a sell stop down here, and that's fine, but whatever. It doesn't matter. Trade did what it needs to do. That's all that really matters. Overanalyzing this too much, but this is kind of the basis of how I find my setups. There's nothing really special to this. It's just watching the market, understanding areas that the market does not want to go to, and capitalizing. Now let's go to the 5 real quick. We have this same purple line. Notice how we traded away from it again. Asia hunted this area, so this kind of set up what I wanted to see for Friday, right? Asia traded right through this area, and then we traded back through again. Now look at the same thing happening. Rejection, rejection, rejection. And I don't wait for a certain amount of rejections. Don't get the wrong idea. I just wait for opportunities. So every time price rejected here, notice the difference between these candles and this candle, right? Rejection, notice the difference again. These candles and this candle. One is telling me or giving me good signs of an entry. 2, it's literally telling me where the market's going. Now, granted, we did trade lower in this area, but what did we create? Equal lows. That is liquidity. So coming into this trade, once we rejected and traded lower, again, inverse fair value gap, I took entry a little bit above, but this was my entry for the trade on Friday. This one was only a 1 because it was Friday. I don't really go heavy on Fridays, but this is what it would have looked like if you guys were live trading with me, if I can get it. Stop loss above, $132.50 risk with a take profit of $380. Now, it's not a lot. I know it's not a lot. There's people making tens of thousands of dollars per trade. This is just, my journey right now. I'm showing you guys that you don't need to make this much. If you're making $300 a day, you're making 6 figures a year. Now, granted, you're not trading on Saturday, and preferably I wouldn't want you guys to trade on Sunday. So, give or take 6 figures, and then you got taxes and all the other shit, but whatever. You guys can see the grasp of where you're going. As you gradually grow your account, you start to get bigger contract sizes. 380 turns into 760, turns into 1,000. Let's say 1,000 turns into 1,500, 1,900, 2,000, and then you gradually grow up. 10 contracts, 3,800. The people with $500,000 in their account, they're probably doing 20 contracts, right? 50 contracts, whatever it is. This is now a $20,000 trade with the $6,000 risk. You can do that. I'd prefer it be on a $150,000 and up dollar account because you don't want to risk $10,000 per trade. Just crazy. But this is kind of, how you build. And there are firms that allow you to do that. I'm funded with Top Step. There's a lot of people out there that are probably funded with Top Step, but I don't know what their end game is. I can't tell you. I can't speak for them. I'm just here. I don't need to be here teaching people. I really don't. I just do it because I want to help you guys. If you choose to follow, learn, that's great. The videos are still going to be posted. They're still going to be made. Do whatever you want. But if you want to take this seriously, this is all you need to do. Just understand the market. And that's what we teach, is to just understand the market. We're not going to sit here and tell you, oh, here's a trend line, price breaks, and now we can sell. No, that's just ridiculous because you have no idea of what the market is doing. You can't explain why it did this, why it did that. That's what we teach, and that's how you become profitable, because and you have a good understanding and basis of knowledge of what the market is doing and how you can profit off of that, right? These are 2 different trades, right? And just to give you an idea, let's just go back to this one and let's fuck around and say this was a 50 contract trade. So what was the other one? 20,000, I think, on that one. This one, if we do 20 contracts, right? If you guys build up to that account size, it's probably going to be massive. Or what did I say? 50 contracts. That's $27,000. Sorry. $47,000 you would make in 2 days. A Thursday and a Friday. Now, those days the trading gradually slows down on Thursday, and it slows down even more on Friday, unless we have some crazy news event or something that's pushing the market, or the volume that is being the volume of money that's flowing through the market on those days is more. Usually it's slow, but it can be fast, or fast, whatever. Anyways, this is the possibility. Now, even just 5 contracts, this is the possibility. You just have to build that account size to be able to do this, right? Which is doable. It's very doable. It's just about being disciplined. You know, if I took more trades throughout the week, I'm just highlighting these because these are 2 good examples to go over, and you know, I can sit here and explain why my thought process was what it was. So for me, if I didn't see anything Monday, Tuesday, Wednesday, it's sometimes it's better to not take a trade, because you don't want to fall victim to your old habits of having to win every day. Now, let's say both of these trades were only $200 each. That's still $400. That's still progress, because now next week that $400 could turn into $800 trades. Now that's $1,600 that you made. Now, for most people, you basically made your paycheck in 2 days, if you think about it, right? Even with the $400, if you make $400 a week, $800 every 2 weeks, you're probably making, I don't know, for some people that could still be your paycheck, or you could be making half of what you get paid. Now, everyone has 2 off days. I know there's a lot of people that work overtime and just fucking work forever, but you have 2 off days. If your off days were Thursday and Friday, you caught these trades, at least you would make $200 each. That's $400 extra that you could put into savings, which would be the smart thing to do, or into your own account to start growing your own account. That's literally what these firms are intended for, is to grow your account, to make you a live trader. It's not just to use someone else's money, even though everybody looks at it that way. It's risk-free, but the whole purpose is to be able to grow your own account. That's why they have rules, because they're not just going to give you $50,000 to trade with. Obviously, you have to prove yourself if it's a regulated prop firm. If it's not, then yeah, you can pay for a $100,000 account and you can't trade during news. You can't do this, can't do that, because then you breach right away. But I hope you guys like this video. I know it was a lot longer than any of the other ones, but honestly, just put everything into practice. Join our free chat, follow us, ask us questions, do whatever you got to do to start, changing. It's already April 12th, and a lot of you fucks still haven't gave one thought or put one foot forward to even trying something different. I've been doing this for quite a while, and I haven't been profitable until 2 years ago. I started when I was 18 years old. All right, I'm 25 now. So it's a fucking journey. I started without any mentor. I started just trying to learn, and it's fucking confusing. So I'm saving you guys the time of having to go through, 3-4 years of not knowing what the hell you're doing, and then finally clicking. And that, it might even take longer for some people. But if you do it the right way, you just practice what we preach, it'll start to make sense. A lot of people in our paid chat actually got funded this week. I don't know how many, but funded multiple accounts too. So, if you think about it, top step, the most they have is $150K. But if you pass 2 of those, that's, can't do math, that's $300,000 in funding that you can, leverage to make into your own live account. That's the goal, right? Again, like, follow, subscribe, comment whatever questions you have. Join our free chat. It's always posted in the description. And, just come in, ask your questions. We're not going to dismiss you, like I always tell you guys, right? Cool. I hope you guys have a great weekend for next Saturday. Week. So I hope you guys have a great day at church tomorrow. And I'm expecting a killer week for next week. All right. Take care, guys.